Hello, everyone, and welcome back to our penultimate session for the day, focusing on everyone's favourite subject matter of compliance. This session is going to be expertly delivered by Alex Hill. Alex is the head of risk at the Stonebridge network, and he's going to be covering topics everything from the current FCA regulation and compliance best practices to deep diving into how to detect fraud risks and handle data in a GDPR compliant way. Once again, this is my request for you to not forget to submit any questions you may have along the way within the Q&A box in the platform. And post Alex's presentation, we'll do our very best to get through these questions at the end of the session. So without further await, I'll hand over to Alex to start his presentation. Thank you.
Super. Thank you very much, Jamie. And thank you for the opportunity to speak to you all this afternoon. As Jamie has said, this is everyone's favourite topic, regulatory rules and compliance. So there are a few areas that I intend to run over with you today to give you a little bit of an insight into my world. I'll talk to you about regulation, data protection and financial crime as the three headline topics. So we'll start with the favourite out of all of those, the regulation part. So I've covered off here some sort of fairly high level bits and pieces. Of course, we are regulated by the Financial Conduct Authority, and I've got their three main objectives up there on the screen for you to see. So I won't run over those. And I've highlighted just on the screen here the main routes to authorization. So whether your business that you are working within is directly authorized, i.e. they're accountable directly to the FCA, or whether they're an appointed representative. So your firm is a representative of a network. I've put that in really just to highlight that the FCA is a principles-led regulator. So they have a handbook which has got a significant amount of rules and guidance, and there will be somebody who is responsible for interpreting that complex set of rules into something that you work with every day. So that will either be your network firm or the firm that you work for. So the rules that the FCA set out are very high level, and there will be somebody who has to turn them into something more practical that you can apply. Some will see this as almost the FCA giving you enough rope to hang yourself with. Others, of course, it gives your firm the ability to create some rules that apply particularly to your business and the clients that it works with. So that's just the very sort of high level how regulation works and how it affects. The key things that I've put on here just to sort of look out for within your role as administrators that regulation will come into. The first one is the mention there of the perimeter of regulated activity. This really is just making sure that in your role as an administrator, you don't cross over from the scope of what you're doing as an administrator into the territory of advice, which sounds like really common sense, but it can easily happen by accident, because you will primarily, once the advice is given, often be the main point of contact for your customer. And lots of things can happen during that journey through to the customer getting their mortgage offer. That can be change of term, change of rate, change of loan to value, and that can take you into the territory of advice. Preparing research and doing suitability reports is an area that an advisor will commonly ask administrators to get involved in, which is fine, but bear in mind it's the advisor who's responsible. So it's important you've got a process to make sure that they've got oversight of anything that you as an administrator is producing for them. But if during that interaction there is anything that involves, like I say, a change of term or change of product, really, really important that that goes to an advisor to deal with that part. In addition to that, things like filling in application forms or fact finds, it's making sure you have the right information from the person who's responsible for that part of the journey, for that advice, so that if there are any gaps, you go back and ask for it. Again, it sounds really easy, but often there can be a burden placed on administrators to sometimes a little bit second guess or fill in the blanks if something isn't complete. So, never be afraid to go and ask. It's the right way to go about it. Other areas I've just picked up on there is complaints process. As I've said, often as the administrator, you will become the main point of contact for customers. So it's important to know the right process set by either your firm or your network for handling complaints. And a complaint from regulators' perspective is an oral or written expression of dissatisfaction, whether or not it's justified on behalf of a person about the provision of or failure to provide a financial service. So sometimes even a low-level grumble that somebody articulates to you could fall into your firm or your network's complaint process. So it's important to make sure you understand that and you know when something should be passed on and what the process is from there for the customer to get a good resolution. Consumer duty is the next item on that list. This is, I'm sure you will all be aware of, a piece of rule change that the regulator brought in a couple of years ago. And this is acting to deliver good outcomes for retail customers, which at a very high level sounds very simple. It's about doing the right thing, acting in good faith, avoiding foreseeable harm, and supporting retail customers, which is really good practice at the end of the day. You're going to be straight with your customers. You're going to tell them the truth. So you're going to act in good faith. You're going to avoid foreseeable harm, avoid causing foreseeable harm, should I say, because that word causing does get a little bit left out in the regulatory space sometimes. So you're not going to do something that could end up detrimenting a customer, and you're going to support them. You're going to guide them through that journey of their mortgage application to get to the point of their mortgage offer and beyond. So again, it's important that you understand what your firm is doing around consumer duty, which steps are put in there. And one area that I will get on to in the next slide, we'll be talking about vulnerable customers in a little more detail. So, one of the key things around consumer duty is making sure your customers understand, you use clear language and are well supported. I mentioned on there financial promotions and social media. Again, there'll be a process for having those approved. It's lots of firms are getting into the space now of Insta, TikTok, and putting out material that just explains a bit about what your business does. But it's just important that you understand what the process is within your firm and within your network to get those looked at and approved, and whether they form a financial promotion from a regulatory perspective, because there will be a formal process to get those signed off. The bottom bullet point on there is around whistleblowing, which hopefully you will never need. But again, it's a good practice. It's about an open culture within your business to have a route to put a hand up and say, there's something here that I'm not comfortable with, and that you've got a route that you are safe to go and disclose and have that conversation with someone about. So every business should or will have a whistleblowing policy. So again, just be familiar that it's there, so that if you ever do need to, like I say, just put a hand up and say, here's something that isn't quite right, you know where to go with that. That's a sort of fairly standard practice within businesses. As I mentioned, vulnerable customers is a key part that was around before Consumer Duty, but Consumer Duty has certainly underlined customers in vulnerable circumstances. And the key to this is, in principle, this is nothing more than businesses within our space will have been involved with for a very long time. It's making sure that customers are looked after as individuals and individual needs are supported. So again, your business will have some support materials in place to help identify customers in vulnerable circumstances. And bear in mind that vulnerability could be transient, so it comes and it goes. It's not necessarily something that is a permanent state of affairs. For example, a young couple who have recently had a new addition to their family could be deemed to be in vulnerable circumstances, i.e., young baby, sleepless nights. Their thinking may not be as clear as it normally would be. So that customer may need a little bit more time to consider decisions, a little bit more support and explanation around the process that they're going along. Similarly, someone who's been recently bereaved, their head is not necessarily going to be in a clear space, so they might need a bit more time and care and explanation around the journey that they're going on. But that will change over time. Whereas maybe somebody who's got a disability or a long-term health condition, there may be a vulnerability there that is of a more permanent nature. But equally, there is no one-size-fits-all with vulnerability. It's down to an individual assessment of that customer and an open and engaged conversation with them as to what support they need and how they can be best helped and supported. For example, older customers may be more prone to being in vulnerable circumstances, but it doesn't necessarily make them vulnerable by default. It is very much around them as an individual and the support they need. So make sure you're aware within your business of how to identify vulnerable customers, where to record it, the support mechanisms that you could have in place as an administrator, and how that gets shared with lenders where appropriate. On to the next topic, data protection. Again, key area which you as administrators will be involved with. The important bits here are all basics that you'll be doing every day, but important to have a reminder every now and again. Verify your customer identity every time. Call that out because it's very easy to get familiar with customers. You know who you're dealing with, and you have a relationship with them. So it sometimes feels a little bit trite to go through security questions with them when you feel that you know who it is on the phone. But that's kind of the point. It's not getting complacent with the stuff and following the processes that you've got in place, double checking who you're sharing documents with. I mentioned that, just double check email addresses if you are sharing documents or information of any sort. You're much better off doing it via a secure means, but all too often I do hear of instances where somebody has literally put the wrong name in an email. So really simple things, not to get complacent with. Be aware of, your security practices of clicking on links. I mentioned on here not to share logins with colleagues. Most lenders now offer administrator logins to their systems, so make sure you use those. Sharing logins will cause, issues with who's input key information into lender systems. So, make sure you're always using your logins and you keep those confidential to yourself. The last topic is everyone's favourite around financial crime, which is, it's been a risk within our space for as long as I can remember. We in broker firms are first line of defence, and you as administrators will often get more into the detail sometimes than advisors. Not wishing to categorise, but sometimes advisors, they're very much relationship people. They're engaged in the advice process, and not true in every case, but they are different skill set to somebody who's involved in an admin role, for example, or a compliance role where you're more into the detail and you've got the time to look at some of the detail around the documents that are in front of you. So, there's an important part for administrators to play in the part of financial crime prevention. So definition of mortgage fraud is just there on the screen for you, which I'm sure that you're all familiar with. So it can include, non-disclosure of relevant information, as well as disclosure of false information, production of counterfeit documents. So this is all about somebody representing their circumstances as something they are not. So there's an acronym that that we use at Stonebridge in preventing fraud. So, and that is fraud. Funnily enough, uncanny that someone put a lot of thought into it. So the financial status. So this is looking at financial statements very carefully, looking back over a period of time. We usually collect bank statements. That's a really good practice. Look back over 3 or 4 months of those, and that will often help pick out anomalies. Remuneration. So does what the customer says they earn look realistic for the job they do? If somebody is working more than one job, as we say in the next one, ask yourselves questions. Do a plausibility check. Is working 2 full-time jobs realistic for that customer, taking into account their family circumstances? And these might be things that you will put together, during the process of dealing with that customer post-application. So it may not be things that are apparent necessarily at a point of advice, but may come to light afterwards. Utilise your experts within your business or within your network. There will be somebody who is responsible for financial crime prevention. Pick the phone up, talk to them, drop them an email, send over the details of something that is worrying you. Trust your gut instinct. If something doesn't feel right, don't just carry on regardless. Raise that with the advisor or with your financial crime expert within your business. And due diligence. Take the time to check and verify the information that you're presented with. I say all fairly sort of bread and butter stuff, but it's been having the discipline of looking at it day in, day out. So again, some of the basics we just flag up here is looking at how long somebody's been in their job. If it's a recent change of job, has that change of job, is it in the same career space? Have they moved on to work for a family member? Have they seen a significant upturn in their salary, immediately or just a few months before applying for their mortgage? They're all just sort of warning signs that could indicate there's something not quite right there, and it's worth having a closer look. Like I say, if they've recently taken a second job, is that second job legitimate? Are they genuinely doing it? Looking at the customer's bank statement, if there's not a lot of day-to-day activity in there, is there another bank account that shows, a better reflection of their financial position, of their activity, of their incoming and outgoings? Is somebody self-employed and they're pretending to be PAYE? And looking at second applicants in relation to the first, is there an indication of someone working for a family member? And are there income sources that are showing up that don't quite tally? So I've got some documents that I'll just share with you and highlight up some of these are documents that we've come across within our business that highlight exactly some of the areas that would be concerned. So these sort of basic layout of pay slips do raise a bit of a concern, but just to highlight on this particular one, you can see here that there's faster payments being credited that just don't quite tally up. So we've got no income tax deduction showing on the pay slip for a start, which is a concern. I'd love to be paying no tax, but unfortunately the Inland Revenue will get a little bit upset about that. And it's very easy for someone to set up a payment by way of a faster payment that is designed to look like a salary payment. Again, it's not a cast iron, but it is something that just prompts you to look a little bit closer, especially if there are anomalies like no tax showing on the pay slip. A second pay slip here, which we saw for joint applicants, well, there are actually two pay slips here, one at the top, one at the bottom of the screen. And this couple were presented as both working for the same company. Both sets of pay slips, if you look very carefully at them, have got spelling mistakes. Barclays is spelt with an E. You will see in the bank details about halfway down the page. And right at the bottom, you've got NatWest that seems to have lost its E, which is none too clever. So again, really, really basic mistakes, but they're only there if you look at the documents, and they're just something that sort of catch your eye, really. Moving on to the third one just in here. This one, we've got a salary credit there of 1385 on the pay slip, which is just down towards the sort of bottom right of the document, 1385 and 87p. But if you look again, just about halfway down on the bank statement, you can see the credit there is for a nice round figure of £1,386. So again, the amount on the pay slip not actually reflecting what was received in the bank statement. So these are all sort of initial alerts, but again, you see the basic layout of the pay slip is it's a real simple format, which again on its own isn't an indicator, but it does just urge you just to have a little bit of a closer look at the details. The devil's in the detail. I mean, I've highlighted again just some examples here. We've got company logos that just aren't quite right, and it's hard to spot the difference. In this one, you just go to the company website and you can see that the correct one is the one at the top with the R inside the yellow circle of the logo. So A is the one there that's right. Again, the McDonald's logo, again, picked up from a pay slip. The bottom one of B, for those of you with a really keen eye, will be able to spot that the middle of the M is slightly floating above the bottom of the two outer legs. So the M just isn't quite right there. That's because somebody had knocked it up themselves. One here for MasterCard. The incorrect one on that, again, that was B. B is the correct one, just because the way around that the colours are. Again, really simple things where somebody producing a document has managed to flip the logo, and it just wasn't right. Here with Starbucks, again, not immediately obvious, but the crown, the little star is filled in, which is correct. So again, just a small attention to detail that has helped put together that something isn't quite right with the document. And some typos that we've seen personally on bank statements are up on the screen now. My personal favourite, which was one that I spotted many years ago, was Cafe Rogue, which was the most Freudian slip that I think I've ever seen in production of a fraudulent document. But again, some of these are very recent and basic typos that have appeared on bank statements that have led us to conclude that there's just something not quite right. So it's, you've got a really important role as administrators to play in protecting you, the firm that you work for, and lenders from fraud from customers. And often customers will have kind of been coerced into it, maybe by a friend or a family, or maybe somebody who organises this type of thing that they've gone out and specifically engaged with. But there are lots of useful tools out there that can just help you get a little bit more comfort as to whether a case is genuine or not. The use of Google Street to look at where somebody says they work can help you get a feel for whether it's sort of aligned with what they've told you. Marrying up the documents, as we've said, having a look at Companies House as well can give you a bit of a feel for the size of that business. The type of property that they're buying will give you a bit of a feel for, does that fit what you know about them from the fact find and from conversations that you're having with them as well. So there are lots of things that can just help you build that picture and put the pieces of the puzzle together that can lead you to conclude, have I got something that doesn't feel quite right here? Do I just need to get comfortable with it before this goes any further? And you're only alerting about a suspicion. That's the key thing. And if you have got a suspicion, do ask more questions. That's not a bad thing. That's just about being comfortable and protecting the business that you're working for, and ultimately the advisor. Speak to your compliance contact. It's what they're there for. They love to help. And within the business that I work for instance, a lot of the time it will just be, giving someone a bit of support in going and looking for some extra documents that get to a point we're comfortable with the case and it can go ahead. Knowing your customer, really key part of being comfortable and understanding the case, and using all the tools that are available in conducting due diligence. You will get, again, lots of guidance and support from your firm and from your network as to how to prevent financial crime and get comfortable with it. So that's it for me. Thank you for listening. Now we may have the opportunity for some questions and answers.
Thanks, Alex. We do have a minute or so to spare before the end of the session. Thank you for delivering that presentation. Really detailed and really insightful. I think it's evident, as you displayed, really, that sort of mortgage transactions are becoming ever more complicated. Customers are evolving in their income streams, are becoming increasingly more specialist and complex. And it strikes me that administrators are at the front line of that kind of defense, I suppose, in terms of vulnerable customers and fraud. I guess, what is the best way, or in your experience, with the number of advisors and the number of things that cross your desk, what what's the best way for firms to sort of embed a compliance first culture in a really busy brokerage? You know, some of the admins that we have on the platform today will have a caseload of hundreds of cases that they're working on at any one time. So is there 5 top tips that you can give that they can utilize to, you know, help them to embed compliance within their workflow?
Yeah, absolutely. I mean, and it is very much a cultural thing. You know, administrators must feel supported in the role that they're performing. It's really key. You know, having a culture that means you're not frightened to ask questions, you know, that's a good thing. It's an encouraging thing to have a good administrator challenge an advisor in a healthy way about, you know, can you explain this to me? Can you provide some more detail around that? So that's a really good thing. Encouraging development of administrator skill sets is a really key part in the day-to-day world, having a structured approach. So, you know, don't undermine the compliance process. Don't allow it to slip by when, as you say, things get busy. It's easy for an advisor to be keen to move on to the next case. For you as an administrator, you need your role really to be ring-fenced. You need to have a structure to it, checklists, you know, boxes to tick, which is a good thing to make sure that nothing gets missed. So those are the key bits that I would hold on to as administrators.
And I guess it's go with your gut, yeah. If it doesn't smell right, then usually there's something a bit off. So trust your instinct. That's
right. There's a little saying that I've had for many years, which if it's brown and it smells of poop, it's generally poop.
Well, thank you, Alex. I guess on that note, and with those sage words of advice, I'm going to thank you for supporting us today and delivering that presentation. We're just about out of time, so our next session and our last session of the day will start at 2:15. It's going to be looking at the way in which we can support the administrator community, appreciate them, value them, and look at ways in which we can continue to support them and sustaining their performance due to the volume of workload they've got and the challenges that they're facing in their current roles. So thank you again, Alex, and thank you to our audience, and we'll see you again at 2:15. Thank you very much.
Bye-bye.